Well, hello YouTube natural gas traders, it's James here again. We've had a fantastic day trading currencies and gold given the chaos in the markets with Credit Suisse and some of the other banks in the US, Silicon Valley Bank and so on getting into trouble. So if you're interested in trading Forex and stocks and gold and silver and that sort of thing, go and have a look at some of the other videos on our channel where I cover some of those instruments as well. Let's have a look at gas. So this is a 4-hour chart. Today we're starting off with the shorter term time frame charts, which is unusual, but it's kind of interesting because on the 4-hour chart we're holding above that support line. We'll see when we go to the daily chart what that looks like. We're holding above that support line at around $2.35, which is where that gap is in the middle of this chart, which happened on the 23rd of February. And that's kind of the important area where the support is formed and that gap is. And we've come down and potentially formed a double bottom here. I'm not calling it a double bottom at this stage at all, but it's got the potential to form one. But look what happened last time we formed double bottom at this same price level. We got the double bottom, potential double bottom. The price took off again, formed a triple bottom, price took off again, and then collapsed down through that support line. So we don't want to see that happening here if we're in the long direction, which I am, 65.35 long to short hedged, as I have been for a number of days now, as you will know if you've been following this channel. Above us on the 4-hour chart, we've got all of these moving averages congregated at the same level, which is a concern. That's forming a pretty strong resistance overhead. However, having said that, a push up through those moving averages and then through this next line at $2.66 will take us into the next part of this range. Remember, we're in a range within a range within a range. The broader range starts at this top pink area here, which is our ultimate target, and it goes down to $1.80. And the intermediate range, or the medium mini range, starts at $2 and ends at $3. And then we're still inside this micro range, you might call it, between $2.66 and $2.36-ish. That sort of region. You can see how clearly it's formed on this 4-hour chart. If we can push up through those moving averages and that resistance line, we should have a good amount of momentum to push us up back to the $3 level. So this area here is becoming more and more important as time goes on, not only because of the resistance level, but because these moving averages are all now combined in this area above us, forming quite a strong ceiling. Let's go back to the day chart. Once again, this is Henry Hub on the NYMEX. You can see how tightly packed we are within this range. It's really interesting to have a look at because of the way the price behaved within the same range going back into February. We're forming exactly the same pattern, touching the top, dropping down to the bottom, top to bottom, top to bottom. And that lasted quite a number of days, probably a week or two. So we might get the same sort of thing happening here before we decide which way we're going to go. As always, our target remains up here at $3.50, 60, 70, and a break through any of these lines will see momentum most probably take us to the next red line, whether it's this red line at $3 or this red line at $2. And right now we're stuck in the middle. I haven't adjusted my hedge. It remains 65.35 long to short. I'll be very happy if we move up through this line. I can start then to take off some of the short hedges, which I took at around $3, and get rid of those, and then clear the way for a rally back up to our target. If we begin to move lower, I'll have to consider adding on a little bit more to the short side of my hedge for a move back down to $2 and then potentially even a break below $2. We'll have to see how all of this pans out. I have not looked at any of the supply and demand and economic factors involved and geopolitical factors involved in today's analysis. I'm purely looking at the charts. For today at least, charts seem to tell the whole story. I hope you found that useful. If you did, please like the video and consider subscribing to the channel.